Welcome to the Atlantic Wireless Productivity Pay-for-Performance presentation. I'm Brandon Tate, the founder and CEO of Atlantic Wireless. The purpose of this presentation is to ensure you clearly understand how you are compensated and how much commission you've earned each month. Let's begin. It is very important that you understand the foundation of pay-for-performance and why it is a superior compensation structure from any other. We will be discussing the background of pay-for-performance and unpack how the model works. We will then talk about how you can calculate, in real time, your commissions for an individual sale and commissions earned month to date. Then, we will discuss what chargebacks are and how they affect your commissions. For the purpose of living into our mission, We Go Beyond the Call, we believe that our RWCs, store managers, should be paid on performance. Productivity is simply how you earn commissions. Associates deserve superior rewards when they produce more. Productivity pay for performance is an incentive-based compensation structure that is more fair to the associate than all other systems. It truly reflects and rewards the contributions of each associate. It rewards good performance and provides an incentive for continual improvement in a way that serves the best interest of all stakeholders in the business. This in turn drives profitable growth. This pay structure enables associates to live into the dynamic organization by allowing them to relentlessly and zealously direct their efforts towards gaining, retaining, and serving customers. So how does it all work? We use the equation for power, which is productivity divided by time. We created an increment called a unit, which is equal to a gross profit of $200. Everything an RWC sells earns some fraction of a unit. The unit amount earned depends on how much US Cellular pays us and the gross profit on accessories sold. This includes new activations, renewals, accessories, prepaid replenishments, and vertical features like device protection. The more Atlantic Wireless gets paid for a particular sale, the more units you earn. For example, new activations earn more units than renewals because US Cellular pays us more on new activations. The good news is that everything an RWC sells goes towards a unit, and you get paid on every unit sold. Hours are the sales hours worked by an RWC. Productivity is the amount of units an RWC sells per hour and determines how much an RWC will be paid in commissions each month. RWCs determine their productivity by simply dividing the number of units they have sold in a month by the number of sales hours worked in that month. Productivity equals units divided by hours. To calculate your commission, take your productivity, multiply it by 100, then multiply the number of units. Simply put, commissions equals productivity times 100 times units. This means that the more units an RWC sells per hour, the more money they will make per unit. The fewer units they sell per hour, the less money they'll make per unit. To determine how much an RWC will make in commissions for their units, RWCs simply multiply their productivity by 100. So if an RWC has a 0.30 productivity, they get paid $30 per unit. If an RWC has a 0.40 productivity, they get $40 per unit. In fact, RWCs can go all the way up to a 0.50 and make $50 per unit. Money. Let's use the following example to illustrate how this works. Let's say an RWC has a productivity of 0.30 and they've sold 37 units. Take the productivity of 0.30 and multiply it by 100. This equals 30. The associate will get $30 per unit in commissions. You take the $30 and multiply it by the units sold. So if they produced at a 0.30 and sold 37 units, they would get $30 times 37 units, which equals $1,110 in commissions. If the same RWC had a 0.40 productivity and produces the same 37 units, they would get $40 times 37 units, which equals $1,480. This is an increase of $370 for producing more per hour. You can see that the RWC that sells more units per hour makes more money. So if an RWC is converting customer interactions into sales using the electronic complete solutions guide and the account review process, is effective with cold floor time by making well-scripted calls which lead to appointments, then they will make more money. If the RWC is not converting customer interactions into sales, texting their girlfriend or boyfriend, surfing the internet, playing games, or counting the cars that are driving by the store, then they will make less money because they are not generating sales. Store managers are paid on the productivity of their store or stores. The neat thing about this commission structure is that it is scalable. If an RWC produces more, they get paid more. So does the store manager. This encourages the store managers to help the RWCs be successful. Store managers are paid 62% of the productivity of the store or stores they manage. RWCs are also paid an hourly rate. This rate is to compensate them for time the associate uses for customer service and administrative tasks. If you combine the hourly rate, commissions, bonuses, and spiffs, our RWC's total hourly rate ranges between $11 and $20 per hour. Now that's getting paid. We have a minimum productivity expectation. After the first live month, we expect our RWCs to produce at a minimum of a 0.20. A chargeback is a commission that was paid to you in the past but is now being deducted from your commissions earned for the current month. There are two types of chargebacks. First, the customer disconnects their line of service, and second, the associate ran the transaction through Retail IQ incorrectly. The majority of the chargebacks are disconnects from US Cellular. When we sell a new activation or renewal, Atlantic Wireless gets a commission from US Cellular, and then Atlantic Wireless pays you a commission for the sale using the productivity pay-for-performance commission model. If that customer disconnects their service for any reason in the first 120 days, US Cellular charges Atlantic Wireless back, and we charge you back the commission paid on that sale. Typically, new activations charge back at a higher frequency than renewals. The main reason a customer would disconnect is because our associate sold them something that they didn't need. That is why a strong needs assessment must take place during the 5-step sales process. One very effective tool to lower your chargebacks is to collect the prorated amount of the customer's first bill. This puts some skin in the game for the customer and decreases first bill shock. Reports like the KPI dashboard, Plus, and Commission Calculator all calculate before chargebacks. RWCs are given a list of their chargebacks and are encouraged to research them to confirm they are valid. We will provide a list by associate as to why the chargeback took place. As a company, we monitor chargebacks very closely. Each day, our reporting shows us every associate's chargebacks. If they are high, then we put that associate on a plan to lower their chargebacks. Our minimum expectation is that an RWC's chargebacks are less than 35% of their new activations. To protect our associates, we use data science to look for chargeback patterns. For example, some of our chargeback reporting shows us the type of phone, plan, amount of money paid for the phone, number of lines sold to the customer, customer name, associate name, store, district, and phone type, all stack ranked from highest frequency to lowest. The main driver for chargebacks is fraud. Fraud is when a customer purchases a device with the intent to sell it for money and never use it. Here at Atlantic Wireless, we protect our associates from fraud using company policy and exception reporting. I've really enjoyed our time together today. This concludes our productivity pay-for-performance presentation. Have a blessed day.